Hello traders, before every trading session you have to make sure you check the news calendar to make sure whether there are not some high impact news that can potentially affect the market. Today I checked and we have FOMC announcement scheduled, which is a very high impact event, and a lot of times the market will get quiet before the FOMC announcement, and we already can see that the structure is looking like a clear trading range. After FOMC there's a really crazy volatility most often than not, so it is important to stay away like 30 minutes away from the market before the FOMC and 30 minutes after, because you don't want to get whipsawed in the huge volatility. So it's better to stay away from the news. This is a trading range, so I keep my resistance and I keep my support, the important key levels in play. I follow my short-term trend lines because that's the only tool I have in short-term trading range like this. Important thing is to understand that I don't want to be taking trades in the middle most often, because this is a no man's land and it's easy to get whipsawed in the middle. I want to wait for price to get to these extremes and see how these extremes react. All right, so I'm just going to be sitting patiently. Hopefully the volatility will still be decent prior to FOMC, because market can really slow down a lot because not that many traders are participating, right? The market has opened and the bearish imbalance took precedence. As you guys can see, each new high is lower than the previous one, and this is a good sign that there's imbalance in the market and sellers are more active. So we keep pushing lower, and when I see a bearish imbalance, I'm hesitant to start fading the breakouts or buying the lows. There was a decent opportunity to take this failed breakout after price formed a break and created a new extreme for this short-term downtrend, but due to the bearish imbalance in the market, I'm staying away from this. I have the short-term trend line that you guys can see how nicely it is confirmed off the bottom, which confirms that the market geometry is working in my favor. So I'm waiting for price get to EMA and this key entry point for potentially get a second entry. Right now the market is quite slower, but it's good to see that we are starting to get some trend in some direction. Alright guys, I'm resuming the video as there is a potential. Let me quickly measure this. How big is this? 2.5. So I'm going to take this short right here. Maybe I can sneak in with the limit order here. Let me chase it just a little bit here. Oh man, this happened so fast. I didn't even manage to measure this on time. And we got in. So I'm going to put it one tick above this signal bar. I'm going to go for 8 ticks. I'm going to move my runner somewhere around here. It doesn't really matter, but what I'm looking at is we have a little bit of an overshoot and we have a new low, first entry short, second entry short, but because of the overshoot I didn't want to take it. And then there was this reversal pattern that it ticked higher. You guys can see higher we have a tiny little break, which looks like an almost measured break of this overshoot, which is a good indication. And this is now a failure of a reversal pattern that is below EMA, first entry short, second entry short failure, because there's a big bullish bar. So everybody who went long here in this downtrend is right now got trapped, and all their orders were taken below this bar right here. You guys can see we didn't really two ticks away we were from filling, but we may get filled here soon on our. All right, so we're bouncing, and you need a lot of times you need to tick through. I wasn't early in the queue enough. I was measuring the bar. You guys can see there's a little support here, which is kind of concerning, but I feel like we can. And they still don't want to get me out here. Come on, man. I just need one more tick. One more tick here. Oh, come on, man. This is not looking good. There are these matching lows. You guys can see micro double bottom right here. Because you're not right now directly into this. Never mind. They like to shake you out. So I'm going to tighten my runner, and you guys can see I put it at the break even because I don't want to risk right now anything else that I made on the entry. Anything right now I make is just a bonus. The 4 contract is the main portion that I make money with as a scalper, and anything that happens right now is just a bonus. I don't want to leave money on the table. If I see trend going without me and I leave money on the table, I can't stand this, and you know, emotionally it affects me. So this is why I'm holding the runner, because I want to milk the market as much as I can in case it goes in my direction. So I'm going to mark this first trade for the day, and this was a first entry short, second entry short right here, but you cannot take the second entry short with the overshoot and horrible bar. But while there is failure of the second entry reversal pattern, and it ticked everybody higher and suddenly reversed, everybody who got their stop here, the stops were taken out. All right, so, and you guys can see the runner got stopped But yeah, this is how I'm gonna play right now. We have a tiny break, attempt to create a new extreme, or we have a new extreme, so we can reverse from here. Let's see, this was a fairly strong downtrend. The market has consolidated for a period of time, and the bias is still bearish. Why? Because this is an overall bearish market structure. I have this trend line that is nicely confirmed off the lows, and this is the only thing that I'm using. I'm using the price action tools, no indicators. I have the 20 bar EMA, but this is a supportive indicator, and it helped me to discern this nice consolidated tight trading range, because there was a new low, first entry short, second entry short. But as you guys think, look, EMA is completely flat, bars are going sideways, no clear direction. This is a straight up consolidating structure, and the best way you trade these smaller trading ranges, you fade the breakout. However, I want to fade the breakout with a good bearish bar. First bar was full on bullish doji, and the second bar was II. A little bit of a bearish body, it has, yes, but it has a bullish stem. So there was no entry for me to take this breakout, which is a shame because it was quick, easy scalp. Maybe you could have snuck in with a limit order, but once again, you have to follow the rules. You cannot cherry pick. So right now I'm still thinking bearish because the overall trend is down, and yeah. All right, so I'm resuming the video quickly as I was preparing to enter this lower high. But what kind of deterred me from taking this trade is the two prior doji bars, and it was quite a little consolidated and congested. The bar triggered lower, isn't reversed, and thank God I didn't get in because this was quite tempting. But yeah, this is what happens when, you know, the prior congestion, it's not so great. And this is overall still, we're still going sideways. We are still chopping this mess, and take a look. We have additional attempt to go lower. They tricked everybody going short, they stopped them out, and now it's tempting. But now I can't go short again because EMA is completely flat. Now we have a 1 2 3 4 5. This is going to be the 6th bar that we're working sideways. I just cannot take these trades. So the best thing to do here is just to practice patience and, you know, not take any trades here. Because this is what you have to do. You have to respect the congestion, and it is very tricky. This type of market can chop you into pieces because it's tempting to both buy and sell at the same time. So you have to sit on your hands and not do anything here. All right, guys. So I'm resuming the video as the FOMC news has just popped in, and you guys can see why it is so important to stay away from taking any setup. The volatility will whipsaw you. It is crazy. And it is better to stay away from trading prior and a couple of minutes at least after the news. You guys can see that still bars are extremely big, and you don't want to be caught in a trade like this. I took a little break at this area right here, came back somewhere around here. There were no any clear setups. I really like, there was a nice second entry short, but the signal bar was not ideal. And by that time, this ended up being a 2-tier trading range, and this key level held price. But, you know, I really don't like taking any trades prior to FOMC because the market will flatten. So right now we're just waiting, and we'll see. All right, so this is the uptrend that FOMC produced. You guys can see the volatility is really insane. This is what will happen after FOMC. A lot of times the bars are big and the market just keep pushing higher, keep pushing higher. I called the wrap at this area. I was expecting a second entry long at the EMA, but once we push lower, I just called the wrap. I stopped trading. I wanted to get one more trade for the video. Just I'm recording once a week, but I just don't want to risk my money only for a video, so on YouTube. So I decided to call the wrap here because I was already getting quite tired. But after that, the market really took off even more. And even though I have a break here and new extreme, this is such a strong uptrend that you don't want to keep selling, and you just want to keep buying because this is such an extremely strong trend. There are quite a few decent second entries, but the signal bars are not great. But once the market is so strong, you pretty much have to take even a bad signal bars because otherwise you won't get in. All right, this was the start of the FOMC, and you guys can see what it produced. So a lot of times during FOMC prior, it is very slow, and after it is extremely fast. So a lot of times it is worth even to taking a days off on a day like this. But let's talk about the structure at the beginning because it looked like a clear trading range with the bearish imbalance. So after the price broke, you don't want to be fading the breakout. This imbalance tells you whether the breakout is going to succeed or not. There was a quick decent first entry long, second entry long with the break and a new low at the strong support. You have room to the EMA reversal bar. So this was a decent entry to take a chance on, but once price pushed below EMA and failed to stay above, you clearly have to forget about buying and you just follow the shortened trend. Market kept pushing lower, You guys saw me taking this trade, which was a trap for people who went long way too early below EMA. Market consolidated, and there I forgot to mark this trade. This was a great new high, first entry long, pullback, second entry long, failure. But this happened so quickly, there's a gap in between, which means price didn't even tick further back. It just gapped up and completely made quick, easy scalp. But by the time EMA is completely flat, pure consolidation, and it is easy to both, it is tempting to both buy and sell. And every time you feel tempted like this, skip this consolidation, take a quick break. It is important to keep taking quick breaks in this consolidation. And we had one leg, little pullback, kind of like a 2 legs up. My initial uptrend was proven invalid. By that time, you push lower and you don't even test it right here. You have to adapt and delete this trend line. And initially I had this downtrend which had a break and a new extreme, so I can keep it on the chart. But I think it is much simple to have the trading range. I think the trading range is the main pattern for the day, but the downtrend ended up coming into play. There is a new low, first entry short, second entry short below EMA, but the signal bar is bad, and this is a double bar entry. Your stop loss has to go all the way up to here. So your stop loss, you know, it's not that bad, but if you sneak with the limiter, but you know, the signal bar is just not ideal. But this is a 2-legged pullback at the key entry point, and there is a first entry short, but this is a big bearish bar, first break of this downtrend. You're expecting new extreme to be formed, and it's a form of a hidden second entry because you didn't trigger below this bar. I marked it as an aggressive entry. I think this is an aggressive. I wouldn't take it and knowing that it's going to be one of those high probability setups, but it is a great bar. And the EMA, the way EMA holds price, same here and same here, is good enough tell. A market created new extreme. You have a 2-tier trading range, and you are at the important key level. So you're expecting for price to push back into the trading range. You're not expecting to short. You have a new low, first entry short, pullback, second entry short, reversal pattern. I was supposed to take this trade. It was my bad I didn't take this trade. I just didn't like how price was overshooting here, and we had a micro break here. The micro channel didn't really fit that well, but this is a nice reversal pattern. Both key entry points are holding, and by that time I stopped trading because I don't want to go into trade prior to FOMC so early. But there was a nice new high, first entry long, second entry long, because price is coming from the key level back into trading range in a strong bullish spike. So you're only thinking about buying. You're no longer thinking about selling because the downtrend played out with the break and new extreme. You have a micro double bottom, which indicated that, you know, the bulls are strong. So you want to switch and only stay with the trend now, which is bullish. You have a second entry long here. You have a second entry long here, new high, first entry long, second entry long. 2 key entry points are holding. But once again, it is very close to this FOMC announcement. And, you know, this is what happened, and market is still going and still going. But, you know, volatility is big, you can get whipsawed. So it is not that safe. So I'm going to wrap it up. Wow, what a move after FOMC. What a strong uptrend. Yeah. So I'm going to wrap it up. Hopefully you guys enjoyed the video. I'm going to see you guys in the next one. Take care, buddy.